This message goes out to all young people out there, especially regarding building wealth. Now, you need to listen to me very carefully. If you're a younger person out there, you better choose to start your investment journey as early as possible, especially if you have a dream to achieve or to build some significant form of wealth. All that matters is you will choose to start on this journey today. And I just have 6 pointers, only 6, that will guide you on how best you can start this investment journey. The first one is time. Maximize the age you have because you're still young, so you still have a number of years to live on. So if you started to invest today and you give time to that investment, you'll be surprised how far that investment will grow. Let us use basic examples. If you are farming, if you're looking after cows, if you started to invest by buying the little cows today, you'll be surprised 10, 20, 40 years how many cattle you will have. If it is money, if you started to invest today, remember, if you invested somewhere which earns you interest, but you don't eat the interest and the interest earns you more interest, which process we call the compound interest, you'll be surprised if you continued, you're not spending the money, the interest that they are giving you, but the interest is earning more interest, but also you keep adding into that investment, you'll be surprised how far that investment will grow big. But also, if you go to the stock market, it's the same story. If you started to invest today, let me say in an index fund, as the value grows, but you don't withdraw the money, that money will keep compounding. And over a longer period of time, you'll be surprised how much money or how much wealth you would have built. But it only works to your advantage. If you started today and you maximize the number of years you still have on this wonderful planet. Then that takes me to point number 2, and that is start to take on more risks, because when it comes to investing, most of us fear to make losses. But if you're a younger person, that should be the list of your worries, because even if you made a loss today, tomorrow you can always recover back. If you made loss the next day, maybe you can recover back on the other day. But bottom line is, the more you make the mistakes, the more you're learning from those mistakes, and it means your next investment, you are at least brighter or you are better informed than the previous one. So if you keep repeating the same cycle, eventually you'll find an investment, one that you understand, but also the one that fits your investment strategy. Then point number 3, you have got to learn by doing. You have got to learn by taking action. There is no one who can ever lie to you that you watch so many YouTube videos or you read so many books, but if you don't put into practice what you learn, then you will never eventually succeed, because you will just be talking, but there's no action. So I want you to choose today to become an action-oriented person. Whatever you learn, put it into practice. And remember, when it comes to these things, you don't need to start big. Start small, but take action. Start small, but take action. If you lose the money, if you make a loss, that's okay. Go back, start small, and then take another action. Because success can only happen when you take as much action as possible, no matter the losses. Trust me, everyone who's successful out there has ever lost money. And most of the people who have lost money, they don't talk about it. They only talk about the success story. They don't talk about the losses. But at the end of the day, it is about you making sure that when you fall, you stand up. When you fall, you stand up. When you make a loss, when you hit a wall, you still stand up. At the end of the day, if you continue practicing by taking as much action as possible, by doing what you say you will do, then you'll be surprised also how much this will build your mental capacity, especially towards your investment journey, but also physically, it will be building actually your wonderful wealth. And that takes me to number 4, and that is take advantage of the existing opportunities. To those who are employed, and I will repeat this, to anyone, to any young person out there who is employed, take advantage of the opportunities you have at your workplace, especially from the investment point of view. If you're in US and you have the 401k and your employee matches it, please take advantage of that, because that's free money. So take advantage of that opportunity. If you are, say, in Uganda, whereby maybe a company pays an SSF, but also on the side it has an independent pension fund, or what we call the provident fund. If they are matching some percentage, please take advantage of it, because some companies, they will match a percentage, or others actually will go ahead and exceed the percentage that you have contributed. But the only way you can qualify is you must first contribute. So take advantage of the opportunities that you still have when you're young. Explore as much investment opportunities as possible. But like I said before, don't be so concerned with the possibility of you making a loss. Even if you make a loss, it's okay. You can always move on. Especially, I always advise in those circumstances, if you haven't understood the investment, please start small. Because when you start small, even if you lose, you are not so much buzzed, because at the end of the day, you can count that as part of your school fees. But if you have invested all your eggs, then that extremely becomes dangerous. But always, if it's a new investment, especially if it's an investment you don't understand, start small. But also, for any kind of investment, take time. You're still young. Take time, read as many things as possible on that particular investment. Try to understand it as much as you can before you start investing. And when you start, make sure you don't start with a lot of money. Start small, learn. If it's the investment that fits your investment strategy, then well done. You can now go all in and start investing in that. And that takes us to number 5. At point 1, I talked about time and the compounding effect. But what is so fascinating, if you start to invest early on, even if you stopped investing at some point, maybe at 40 years, if you stopped investing, your money, the one that you have already invested, will keep growing. And that's the beauty of it, that you don't need to keep investing or saving for the rest of your entire life. You can just maximize your first years, because in those years, a lot of things are happening. One, maybe you don't have too much responsibilities that is taking most of your money. So put majority of the money towards investments. Then when that time comes, when the responsibilities are quite a lot, then maybe you can actually decide to reduce on the amount of money you're saving, stroke also investing, because at least you have invested quite a big amount of money, and because compounding effect is at work, the money actually is working for you. But if you chose to start investing late, then unfortunately it's not in your favor, because two things. One, the responsibilities most likely have increased on you, but also very soon maybe your finances are going to start to go down. So it is extremely dangerous to wait until you're old. But if you're young and you commit yourself, then you have even the liberty at some point, maybe 40, 45, to say, no, enough is enough. I have to stop investing, because what the investments I have, now they are working for me. Actually, you can even retire early. You can even choose to retire early, because the investments you would have made by that time will be enough actually to sustain you. So in your old or middle age, you are not under pressure to make more money, but also you're not under pressure to invest more money, because you have already done that in younger age, and the compounding effect actually is now working on your behalf. And then finally, when you start your investment journey early on, you are not so concerned with inflation, because you have got a number of things that are working for you, especially if you have tried your best and diversified your portfolio. Let me just give an example. If you invested in real estate, then also you invested in a business or in the stock market, and then also you invested in near cash assets like maybe treasury bills and bonds, mutual funds, at the end of the day, because you have diversified your portfolio, highly unlikely that inflation will be your biggest problem, because the rate at which the compound effect is working is not similar to the rate of inflation. But what do I mean exactly by that? If you find yourself that the inflation rate is higher than the rate that your money is making for you on an annual basis, then highly likely it means you're losing value on your money. And that would be extremely dangerous, because it means later on you might need to have more money than actually you have. But if you diversified your portfolio and you started your investments as early as possible, compounding has been at work, then the least thing you can worry about at that time is inflation. So the final word and the word of wisdom to every younger person out there: start investing as early as possible, because when you do, the compounding effect will always work to your own advantage.